So that's the thing. Just analyze, anticipate, enter. You can see this NAS 100. I posted a video on this and I told you guys NAS was going to rally to the upside from this key level and it was going to hit this level, low hanging fruits. Can you see how we literally went straight to that position, hit the low hanging fruit objective? Can you see how it went straight there? Precision. This is not because I can see the future, it's because I understand market structure. That is all you need. Market structure you can literally trade with just market structure and nothing else. You can literally trade with just market structure and not use Fibonacci, not use fair value gaps, not use anything else. And you'll still be making money from this market. That is literally all you need. Look at how price came down there, mitigated that monthly fair value gap. We mitigated this monthly fair value gap right here. And after that mitigation, the next thing you want to see. Now, what time frame do you want to see after mitigating the monthly fair value gap? That question is
Four
for you.
hours. 4 hours.
4 hours, sir.
4 hour, exactly. You want to see a 4 hour break of structure. So have it in mind that we are literally just breaking a 4 hour structure. This is a 4 hour high and this is a 4 hour low. We are literally just breaking that structural high. This candle has about the current time is 2:06. So this candle has about 1 hour 8 minutes to close. This candle right here. So we need to see this candle close. Once this candle closes, the next thing we now do is to look for areas that price will come down for a retest and then continuation to hit all-time high. So even if you missed out from here, there's still opportunity for you to buy this again. Price will still give you another opportunity, one last opportunity before the major expansion that will now start printing new all-time highs. The question is, will you will you see that opportunity? Or will you take it that, oh, I missed this one. It's over. It's never over. There's always another area to get in. For example, look at this fair value gap. This was another area that price is also giving you an opportunity to buy. Rallied. This is another area. Price is still giving you another opportunity to buy. And after that, you realizing me pointing to you guys and telling you this is low hanging fruit objective. What that means is this is literally the easiest target that price will rally to. All you now need to do is using the fair value gaps as support and keep taking the trade to continue higher. Now, you can use you can use two things. You can use inverted fair value gaps. Can you see the inverted fair value gap here?
What makes it inverted?
So what makes this inverted is because this was a fair value gap, that this was a sell side fair value gap, sell side imbalance.
Okay. Yeah.
Now, sell side imbalance simply means an imbalance or fair value gap that could potentially be used for a sell.
Okay. Okay.
If it fails to be used as a sell, it becomes an inverted fair value gap and it can be used for a buy. Can you see how it failed for sells? Price literally blasted through it, came back down, and used it for support and rallied for a buy. Now, all you need to do is to mark out the inverted fair value gap and then look for much more confluence. Another confluence you look for is a fair value gap resting at that key level. So right there, you have an inverted fair value gap and you have a fair value gap resting right there. So that is multiple confirmations that this key level could be an area of support to drive price even higher. Another one is, take a look at this one, this right here, another inverted fair value gap, resting right here. Can you see how we came back in there and we use that as support? Same thing again. You use a fair value gap as an added confluence. The most important thing is understand the market structure. Once you understand market structure, you will see that everything else will fall into place. If you are on the right trend, everything else will fall into place. It will seem as if everything is working in your favor. That's what it looks like when you're on the right track. Everything will look as if they are working in your favor because you are on the right track. That is why you're seeing price literally rallied, came back down, used the inverted fair value gap as support, fair value gap here as well, aligning and making that key level high probability rallied, come down again, inverted fair value gap here, came down into it, fair value gap here as well, making it an added confirmation, and we rallied again because this is our target. What is resting right here? What is this?
Low resistance liquidity.
Exactly, low resistance liquidity. So this is low resistance. So it's an easy target for price to rally into. So price can easily rally into that position and run out that area easily. And you can see how you just target that area. Once you hit that level, we get out. You literally, the moment you hit that level, just close that position. Why would I say you close the position? Because anything can happen from above here. We could see a major retracement. And you don't want to be in a trade and it's up 2000 and then it reverses and you're and wipes out $1,000 profit. It's better you take that $1,000 profit and then leave $1,000 left. So even if it's coming down, it's gonna come down maybe $500 floating loss from your profits. So is it making sense, guys?
Yeah.
So this is just how it's not even just all about getting an entry. It's also all about knowing where to exit and why that area is a good area for you to get out. For example, low hanging fruit objectives, these are your major targets. If you're on a trade, you need to figure out where is the low hanging fruit objective. That should be your first. The moment you've derived your entry, the next thing is to derive the low hanging fruit objective.